Hi everyone, I'm here with Josh Malancuk, the president of JM Tax Advocates. If you're okay with this, I have a few questions for you to answer. So if you're
Sounds
ready,
great.
all right,
Yeah,
we'll get
sounds great,
started.
Jessica.
Okay. So question number one, how do businesses stay in property tax compliance?
Well, from year to year, they have to essentially create personal property tax returns and, in some cases, real property tax returns
Okay.
to meet their compliance filing obligations. And so, if the deadlines are not met, some really bad things can happen with
Okay.
penalties and omitted filing penalties for not complying, not meeting their filing requirements.
Okay.
And so it's really important that as a starting point, a business will calendar and plan for compliance and full compliance for property taxes.
Okay. All right. Good to know. Well, then question number two, how does JMTA incorporate compliance planning for tax minimization?
Yeah, so instead of just assuming that the prior year levels of reporting are correct, our team will actually review and question and develop improved processes for reporting assets on the return so that the return is right the first time around without necessary amendments at a later point. And so when we're doing that, essentially it's saving the business money by improving the positions, and in many cases, the compliance fee will be fully funded with our savings programs.
Yeah.
And
Okay.
so it's a real win-win for a client when they plan for the best possible outcome for
Right.
personal
Right.
property tax
Okay.
filings.
And who doesn't love to save money? So-
Absolutely,
especially right now.
especially
Yeah.
so these days. Yeah.
All right. Well, number three, what is involved with economic incentive compliance?
Yeah. So once a business has negotiated an agreement for an economic incentive, there frequently will be an ongoing compliance survey to report the job growth and where that business is at, for reporting the workforce, the gross wages that they've contributed to the community, as well as how the business has invested and where those balances stand relative to promises for investment growth.
Okay.
And so the compliance comes about through a few different forms, typically at the state level and possibly at the local level. If local tax abatements or TIF agreements have been put in place, there'll be separate surveys for that and reporting. And then the third area is, after the compliance is filed, it's important to make sure that the state and local jurisdictions are certifying the correct amounts so that the benefits are as expected.
Okay. And then what would be some pitfalls for non-compliance from the other side of things?
Yeah, so various areas will put you in non-compliance. The first is not filing the surveys timely, and so if you can take the guesswork out of that and file those, that's really half the battle. The second is not completing the forms correctly, and so if you don't file correctly with all of the information that's required in the format that perhaps the economic development entity for compliance requires, then there'll be a non-compliance situation that needs to be corrected. And so possibly jeopardizing the incentive if those fixes are not made. And so that's a couple of the different areas. The third, and I think it's worth mentioning, is if you're not meeting your commitments in full or in part, it's really important to recognize that as early as possible and put a mitigation strategy and communication strategy together so that you are not, as a business, brought up for potential non-compliance hearings, clawbacks of prior benefits received, and certainly cessation of the incentive benefits that were negotiated way back when.
Okay, wow, good to know. Thank you.
You're welcome.
And then the final question that I have for you, going back to the property tax side of things, what are some examples of best practices to review annual incentives to ensure full benefit?
In my mind, this is a real simple answer.
Mm-hmm.
My approach, our approach with the team has always been to take the mindset to assume that the assessment, the incentive assessment amounts are incorrect.
Okay.
And to challenge, scrub, create a substantive review to prove that the certified amounts are correct.
Okay.
And so that involves a different level of diligence and audit, if you will, than what most of our clients before they got us involved would undertake. And so, we really do a thorough job to make sure that our client is receiving every penny that they negotiated,
Yep.
and that those amounts are as expected and are at the maximum possible level of certified incentive.
That's great. So just as a clarification, it's always good to have a professional with property tax and economic incentive in a business.
A navigator that has experience in the area will serve a business well and will translate to a lot of bottom line savings that
Absolutely.
will add to the business profitability and certainly improve the expense line items for state and local taxes.
Wonderful. Okay, good to know. Well, thank you for your time. I'm sure I will have more questions in the coming up for property tax and economic incentives.
Sounds
So thank
great.
you.
Thank you.
Find out why leading companies trust JM Tax Advocates to bring their property taxes back to reality. Get your free evaluation today.